Well, it's been a pretty tough time for gold bulls of late, but are we seeing better times ahead? Well, what we can see at the moment, if I have a look at the way I'm looking at the gold market, over the last 8 days, we have seen pretty tight range coming through. Good consolidation playing through, and what we're seeing is these ranges are being sold into 45.80, 45.90, and down to the low of that recent range, 8 days of consolidation range into 44.50. And so what we're seeing is at the moment is really there's no emphasis for the bulls or the bears to really push prices around, and one really needs to dominate the situation. So I think if we were to get a downside break of 44.50, that takes us down into horizontal support around sort of 43.75, which is also where the 200-day moving average is. So that's what we're looking for. The longer this consolidation goes on for, the more powerful the break that you're likely to see. Now, to the upside, if we get a break of that top end of the range, as I say, we're looking for the 50-day moving average to come into play. Yeah, that could potentially be a medium-term trend filter, and a break of that level then takes us into sort of 47.75, which is the 12th of May high, and that sort of takes us there. But will the price persist into that point? Now, also, it has been a very tough time, as I say, for the gold market. We've seen that in the flows. Over the last 3 months, we've seen $9.5 billion of outflows from the GLD ETF. That's the largest amount of outflows we've seen since 2013. If you have a look at CME futures positions, you can see that managed money has come to about a net long position of around 93,000, which is the lowest level really since January 2025. So you can see in the positioning where that sentiment has been lying, and you can see the flows in Chinese ETFs as well, which have been consistently coming out of the market. That position now is come out. It's not rich anymore. That gives us a really clean position potentially for an ascent going higher. Now, there is an opportunity cost for holding gold, as we know. What we've been seeing is that with Brent prices and WTI prices going higher, we see inflation expectations moving up, and rates have been moving up in terms of the expectations from the Fed, and long end Treasury yields have gone up to say 468. Now, all that rollover, the gold market has absorbed a lot of that situation. You can get these better returns in the bond market potentially, and gold with no yield has been negatively affected by that higher inflation expectations. Now, for that to move down, I think for gold to really sort of get a wriggle on and break out to the top side of those ranges, what am I looking at? Well, I think we need to see some of these Fed hike expectations coming out of the rates market. We need to see the market, which is expecting a hike of Q1 next year, removing that and having some conjecture. So this week's core PCE number will be very interesting. We need to see Brent prices trading to $90, WTI front month going nicely lower in that situation, and that will remove a lot of the energy cost inflation coming through. And 10-year, if that can continue this short-term move lower in terms of yield, will start to be good for gold. But what we've got is tight ranges at the moment. People are not seeing the investment cases. We're seeing outflows through the GLD. That short-term range that I talked about, a break-even of that side, I think will then determine where we're going to go. Until that point, looking to continue trading that one long and short in the short term.